Well, I'd just like to thank everyone for joining us today for a discussion on financial blind spots. Today's webinar actually is our first instalment of our Get Ahead of It series, which we'll bring to you each month just to give you some important insights into the financial side of your farming business. Joining me today is our infamous Kath and Kim duo, Kath Clarke from up in Bundy region and Kim Corfield from North Burnett. They have a combined 30 years of rural financial counselling experience along with their own farms. So they've got a lot of experience there and they'll be able to provide some great tips and some clever options. So, hey, make sure your pens are at the ready and your financials are there. Kath and Kim, thanks for joining us.
Thanks very much, Warren. Kath and I are really excited to be here as the first participants today. However, I just wanted to clarify, we are definitely not the comedy duo of Kath and Kim. We are the financial duo. So coming to you today from Colston Lakes and not Fountain Lakes.
Look, and just for a little bit of housekeeping, we'll answer some questions at the end. So feel free to drop any questions that anyone has just into the chat and we'll go from there. To kick us off, Kath, could you just explain the key types of the financial reports that we'll be going through today?
So the three types we're going to talk about are the profit and loss, the balance sheet, and also cash flow budgets. So most people would be familiar with their profit and loss from their financial statements, and they detail what your income and expenses are for the year. The balance sheet shows what your business owns and owes, along with the owner's equity of your business, while the cash flow budgets record the actual cash inflows and outgoings in your business. So if you have your financial statements handy, if you want to have a look at them now, and hopefully it'll give you some insights of what we actually look at in your business as well. So obviously a profit and loss, usually in your financial statements, summarises a whole financial year. So it goes through from the 1st of July through to the 30th of June the following year. However, when analysing business performance, I actually find it really useful to break down that big annual period into smaller chunks of monthly periods. So you actually get a better understanding about what your business is doing month by month. There are a couple of different ways that your income and expenses can be reported, and that really depends on how your accountants set up your business when you first started.
So I guess you're referring there to the cash and accrual method. So for people that aren't familiar with that, could you just explain that, Kath?
Yeah, sure. So there are two types of recording, and that is cash. Obviously, that relates to when money changes hands within your business. So whether that's going in or going out. So the recording or reporting of it happens when you're paid for something that you've sold or when you've paid someone. So it's the actual recording of the cash movement of the transaction. So yeah, that's cash accounting.
For example, today we've got a cattle sale, weaner sale at the Biggin sale yards. So if you had actually sold those cattle in June, but your money was deposited into your account today, then that income would be reported as of July. So the reporting of these transactions correlates to when the money moves, like Kath said. And the second way of doing the reporting is the accrual accounting method. This records the business transactions when an invoice has been sent out for payment or when you get a bill issued to you.
So an example of accrual accounting, so if you sold the same lot of cattle at the sales and the recipient created tax invoice was issued in June when the cattle went, the actual transaction would be recorded in June despite the fact that you're paid in July. So it can really change the look of your profit and loss statement depending on which method you use. And that's why you do need to be aware of what that is. So it's really important then to bear in mind timing of sales and issuing of invoices and those types of things, especially when you're coming up to end of financial year, because it can impact how you're reporting and how your profit or loss looks for your business. So if you're thinking about trying to minimise your income and maximise your expenses, thinking about that timing, especially at end of financial year, is really important. So just to cover again, the difference between the two is cash reporting is when the cash changes hands, and if you're using accrual, it's actually the paper sort of transactions. That's where the difference comes.
And that's where we often get questions around how the bank accounts can look drastically different to what the profit and loss is telling them. So, Kim, could you sort of give us a run through on things that the profit and loss doesn't show?
Certainly, Warren, because we hear this from our primary producers all the time when we're meeting with them. The profit and loss is saying I've made money, but where is it? It's not in my bank account, like you just said. So some common things that we're finding that are not shown in your profit and loss is what's the money that you have in the bank account. Loan repayments are not depicted, especially the principal repayment on your loans. So interest will show, but not your principal payment. And then owners' drawings or their personal expenditure. Many people forget to account that for themselves. And then, of course, if they buy any capital assets, those purchases are not covered.
Thanks, Kim. Look, and while you're on a roll, could you just step into balance sheets and give us an outline on those?
Sure. The balance sheet, it shows what your business owns and then what it owes. So along with that, it shows the leftover as what is actually your owner's equity. So assets are equal to your liabilities plus your owner's equity. Assets, things that you own, such as your property or plant and equipment, and liabilities, things that you owe, like bank debt and bank loans. These can be categorised into current, which is less than the 1 year to be used or owned, or obligations that are due within that year, and then the non-current, which is the over the year that are due to be paid or received. The owner's equity is the amount remaining from the value of your assets after all the liabilities and debts have been deducted. This report, I think it really helps people determine the overall health of their business, the asset position and year on year, and the trend of the business, if it's going in the right direction. Generally, that's by reducing the balance of the liabilities and increasing your asset balance. So that's when you know that your business is doing well, when they're showing in the right directions.
Brilliant. Thanks, Kim. Look, Kath, if we jump over now to cash flows, if you could just give us an outline of their purpose and how they can be used.
Yep, sure, Warren. So cash flow statements or budgets are really beneficial as they track the money that comes in and out of your business as it occurs. So it helps you forecast future income and sales, understand your actual expenses, your loan repayments, tax obligations, and all those sorts of things, and ensures that you make adjustments so that you have enough income to cover your expenses in advance, and helps prevent cash shortages and avoid any ill-considered debt. And that's sort of one of the main things that we look at quite often is, how can we prepare for and prevent those cash flow shortages occurring? Looking at your cash flow budgets can also help if you have payment cycles. So obviously a lot of people produce seasonal produce, so sugarcane farmers, avocado producers, those type of farmers. So being aware of the different cycles help you forecast for your future business finances, help predict when there will be shortages and surpluses in your cash flow, and also help to plan ahead so that you always have enough money to cover any payments or any obligations that you have.
Talking about cash flows, Kath, you'll love this. My husband used to always come to me when we were doing our cash flows and his projects he'd like to do for the year. And he would double his projected cost so that when he came in under budget, I'd be really, really happy with him. So now that he shared his thinking with me, it sort of backfired a bit, because now when he's telling me the cost of his project, I automatically go to halve it, and then it's when he has a meltdown because no, I'm not doing that anymore. I've fessed up. I'm actually on true numbers. So as I said, many farmers and primary producers, we receive our income seasonally, like you said, with the sugarcane farmers. They receive such a higher part of their income at the beginning of the harvest, and then it peters down to a smaller percentage throughout the rest of the year. So it's really important to get that timing of commitments and payments, and so that when there are times the expenses exceed their business income, they have those alternative arrangements in place to make sure the shortfalls are covered to be able to continue trading. Because that is literally, I think, one of the main questions we get a lot of the time as rural financial counsellors is, I don't have any money to meet my commitments in the next 3, 6, 12 months. So working capital is so important. and can be in the form of an overdraft or another facility that's put in place to cover those times when the shortfall is around, because we've all been there. It's either too dry or a storm's come through and destroyed your crop, and you're going to need to have something in place to prevent that financial stress that comes from not being able to pay your commitments. What we've talked about today is just that short snapshot of cash flow, and it will definitely be covered in greater detail with our next Get Ahead of It webinar in August.
Thanks, Kim. Look, and I think that's a common red flag that we see as financial counsellors is, the profit and loss shows a profit, but there's no money in the bank, and people sort of are confused as to how they're in the position they're in. Kath, if you could just run through some of the possible reasons behind that being the case, that the profit and loss says you're looking good, but your bank account says otherwise.
Yeah. So one of the ones is we've already discussed it, and that's that difference in whether you're using cash or accrual accounting. So it could be that you've issued an invoice to a customer, but it hasn't been paid yet. And therefore it will won't show in your bank account, obviously, but it will show on your profit and loss. But it's the fact that it is actually still outstanding is shown in your balance sheet under your accounts receivable. So it is reported in your financial statements, but not necessarily, you haven't got the money in the bank.
Yeah, and Warren, like I said earlier, the principal repayments that are made to your loans, they don't show on your profit and loss either. It's only the interest that gets recorded there as an expense. So the principal for repayment, it does come out of your bank account, and it's often a substantial amount of money. So these changes are reflected on your balance sheet by a change in your liabilities, and that's why you need to be able to prepare your cash flow budgets.
Yeah. Another thing that doesn't show is like your owner's drawings. Obviously, say you went on a big shopping trip for some shoes, and that's come out of
Kath,
your
come
bank.
on, shoes, leave shoes out of it. That's a lady's prerogative to have a good shoe cupboard.
Well, true, but all the necessities in life, they are classed as owner's drawings if they're coming out of your business bank account. So, if you've drawn money out for personal use, obviously those cash amounts and the funds won't be available to you. So,
Yeah, and talking on buying things that are much larger than shoes would be your balance sheet items like buying assets using cash, or purchasing inventory for your business using the cash for sale later.
yeah. Yep. Another thing that shows in your profit and loss is your depreciation. So it's obviously recorded as an expense, but it's really only a book value. There's no actual money coming out of your bank account for depreciation. So in that way, depreciation is a positive effect on your bank balance, but that is only up until your time that you have to replace the item that's being depreciated. So yeah, you might have a little bit extra in the bank at that point, but once you have to replace the item or the machinery, then obviously you're going to have to outlay that money again. So
Sure.
Yeah, in addition, I think to the balance sheet, it's such a great indicator. If your liabilities are increasing and your assets are decreasing, that is a really big red flag for you that your equity is being eroded, and that your business is actually going backwards.
Right.
Debt levels are increasing, which then impacts your business cash flow and being able to continue servicing your debts moving forward.
Sure. Thanks, Kim. Look, I understand, Kath, you have created a mock-up, a fictitious company to give it, sort of demonstrate how better recording can lead to better decision making.
yeah, sure. So this is just to give the producers a bit of an example of how we actually use your financial statements and try to improve the performance. Sorry, my light's gone out.
You have to jump around.
There we go. It's a sensor. We have paid the bill.
I was going to say, are we short of budget there?
Yeah, no, all good. So basically, with my company, so I'll just tell you a little bit about my pretend company. It is my farming enterprise, and I produce avocados and capsicum for the purpose of this scenario. So the avocados, in this instance, I am growing them on my own property, and I also lease a property which I'm growing capsicums on. And so having that insider knowledge about the business is what then informs what I want to know more about. So obviously that's why we meet with you, discuss your individual circumstances, and then we actually apply your business and look at your business as an individual and try and work out the best way to improve your financial performance. So in this instance, so if we've got slide 1, this is Casey Enterprises, Casey Farm Enterprise. And you'll see that it looks like pretty much every profit and loss that you've got an income from the farm, and there's some interest and other income in there. And then there's a range of expenses. Obviously, that really doesn't give you too much information about my business. I know about my business, but really it doesn't give you too much of an insight. It doesn't tell me what I'm really producing and how that gets broken down. So it's broad categories that are used. So now that I want to know more information about the business, what I am going to do is sort of conduct an analysis and identify that I want to break down the overall summary and be more particular. So to do that, you can actually add different categories and be more specific about the information that you're trying to record. So, and you can do that if you're looking at, obviously, I'm a producer. As I've said, I'm producing avocados and capsicum. So obviously I'll start to record the different types of income. And then you can actually put more detail into your expenses and assign it to the same crop. So you actually are getting far more information available to you, which will help you make better decisions. So this slide, you will see, has now got crop 1, crop 2, and then a column with administrative overheads. So the reason we've done that is because obviously I can clearly say what incomes come from the avocados. I can clearly say what incomes come from my capsicums. And I have broken down my wages and my contract workers and other expenses that I've incurred into the appropriate crops. And you can do that as you have an invoice come in. You can break it up based on the knowledge you have on your own business. You'll see the third column has administrative costs or overheads. And so they're costs that are more aligned, not directly aligned with one crop or the other. They're basically the cost of doing business. So they really need to be allocated, and you can usually do that in whatever way suits your business best. So you could potentially break it up by the area of the farm, or you could break it up based on the percentage of income. So it's just a matter of considering your own business and making a decision. You'll see in this slide, I've actually allocated my expenses out. The total's shown in yellow at the end, and then you can see how I've broken it up based on my individual circumstances again. So interest income, I've split between both crops because it really hasn't been generated by one or the other, one crop or the other. Other income, I've also spread the administrative overhead over both columns there. Accountancy, again, split it out evenly, and bank fees, those sort of things. You can see where I've allocated them 50-50. The depreciation, you can see, I've actually allocated to the tree crops, and that is for the purpose that this was a picker that I bought, and so that's related to the avocado crop, and therefore the depreciation gets allocated to the first crop. So really, it's how you allocate the overheads is really going to depend on your business, and so in this case, on my scenario, I've just made some assumptions and done some allocation. Now, the interesting thing that you'll see is that from looking at the overall picture at the beginning, where the business was making a profit of $209,550 and looked like a reasonably healthy business overall, when you break it down into looking at the income and expenses for each crop, it becomes clear that my avocado crop is actually operating at a significant loss, whereas my capsicum crop is operating at a quite a healthy profit. So overall, it looks like I'm a healthy business, but when you actually break it down, you can see that the avocado side of the business is actually dragging down the overall business, and it could be far more profitable. And this is where we sort of look at the overall health of both sides of the business, both commodity lines, and it can be where we start to work with you to develop what options you're going to look at going forward. So And again, this is based on the information about your individual farm. So there could be things that have affected your income for that year. So say for this year, my avocado trees were only in the beginning of their production, and we know that year on year their production will increase in the future. So that could be why my income's low this year. It could be that I've had a crop loss. It could be that there's been a crash in the commodity price. So depending on the circumstances surrounding those results, it may affect your decisions going forward. So on the face of it, you might say, oh, we've made an $838,000 loss. But the reality is in 2-3 years' time, it could be much more profitable. You have to look at these circumstances that are appearing in your financial statements and considering the available options and making considered decisions. And that's what we're there to work with you through to discuss and work out the best option for your farm and your operation. So
No, look, 100%. Look, and at the end of the day, like you said, that we're set up to assist producers with exactly that. That's what we do. So if there's something you want to know, you've got to know how to track it, and we can assist with that.
And we see that regularly with our clients. Another example of keeping a track on expenses is really wages. They continue to rise year on year. And if there's no reductions made to your production costs, unless your income rises, well, then your profit margin is going to reduce year on year. Seasonal cash flow again, being able to consider syncing your repayments to when your income actually comes into your cash flow. We have so many cattle producers sell their cattle a couple of times a year throughout the year, and that just doesn't work if they're trying to do a monthly repayment to a bank. Cash flow, again, rather than thinking about what might happen in the future, you need to draw a line in the sand today as to what might happen, because we often find they're not real keen to work on a cash flow because it's very hard to predict what's going to happen down the track. So that's why we try and bring it back to a simpler session around what might their thinking be as of today, rather than what actually might happen. It's a liquid document that is fluctuating and changes month to month. So that's why it's really good to be able to do that budgeting. And as we said, a really great tip is to break up the repayments into principal and interest so that you can see what won't actually show on your profit and loss.
yeah. So budgeting, it's another important consideration. So actually looking at what capital works you've got coming up and making sure that if you make a purchase, it doesn't cripple your cash flow. Make sure that you have enough working capital. So if you have an unexpected problem arise, so like the tractor blows up or you have to, make some sort of emergency repair, that you actually have enough buffer zone and enough cash to be able to do those things as they crop up, as things always seem to do. And the other thing is we quite often hear, oh, the accountant said we're going to have a tax problem this year. You made a profit. You need to buy something, and that's no criticism of accountants because it's a very valid concern. However, you do actually also have to think about the tax minimisation versus your cash flow position, and make sure that if you do make a purchase, that it isn't going to impact your cash flow after the end of financial year and the next financial year, and that you still have enough money to be able to operate and pay wages and do all those things that you need to do and don't run short. So
Look, and that's exactly where we'll be heading into our next episode, which is where we do a deep dive into cash flows, which are a critical part of that forward planning aspect of your business. So there's no questions today, but feel free, if it did trigger questions, that you can talk to any of us at any point. We'll be moving into some interesting things with the cash flows next month. We're going to have rural-based financial counsellor Michael Fagg from up in Toowoomba, along with Business and Rural Solutions Board member Leanne Rudd. They're a winning combo. They'll be able to provide you with some real insights into your cash flows, so make sure you tune in for that one. Now, the content today, it can be a little bit overwhelming. There's a lot of a lot of detail and things that really you don't use on a day-to-day basis. So we don't want you to feel overwhelmed, but if it's created some additional questions or you simply like to learn more, make sure you continue to tune into these Get Ahead of It episodes, because we're hoping that we can really benefit your business moving forward. Before I let Kath and Kim go, though, I just wanted to, if I'm traveling up your way, where's the best spot to get a pint? Look, I know that if we're going to Bundy, we're going to get some rum and we're going to get some ginger beer. But what about a pint?
Well, my personal favourite is chicken pie, and that would be from Fred and Lynn's in Spencer Heights. They do have the best pastry, the best filling. So, yeah, that's my favourite pie shop in Bundy.
North Burnett, there's a bakery in every town, Warren, so you'd have to recommend everybody stop and try one wherever they are.
Oh, good on you. Look, if anyone's down my way in the Southern Downs, you get down to the Granite Belt, nice and chilly, but Foxy's Bakery, that's the one down at Stanthorpe. You've got to go there. Brilliant. Look, the important thing to take out of today, I think, is that, you know, if anything's triggered your curiosity, give us a call. We're really happy to chat. So start a conversation with one of our team. You know, we're a friendly bunch, and we love to talk numbers. So we'll see you next month, and we'll help you get ahead of it. Bye for now.